Welcome to the Exit Rich podcast, where the leading authority on buying, selling, fixing, and growing companies, Michelle Seiler Tucker, is dedicated to helping you find the path to retire rich and move on to your next adventure by exiting your business for the desired dream price you deserve. Get ready to exit rich with your host, Michelle Seiler Tucker.
All right, welcome to another episode of Exit Rich. I tell you what, Pam Jordan and Michelle Seiler Tucker are experts at finance and creative, but we're not necessarily tech experts. So we had a little technical difficulty this morning, and I brought in my team who got it all figured out. So thanks, STI team. So I really want to introduce my special friend, guest, somebody that I collaborate with. We work together on different deals. Pam Jordan. Pam Jordan, welcome to the show.
Hey, thank you. So excited to be here.
So Pam Jordan is a financial expert and speaker. Pam specializes in analyzing and streamlining the back end of fast-growing companies, as well as creating more profit strategic growth centers. It's one thing to make a lot of money, generate a lot of money, but at the end of the day, what's the most important? What you walk away with. So Pam has an MBA from Elon University and has been honored with numerous awards and accolades, including Outstanding Business and Financial Executive of the Year. Wow, I'm in great company here. And Financial Executive of the Year and 40/40 in the Trial Business Journal. She has been featured on entrepreneur.com. She's also a certified Profit First professional and Empire Operating System coach. And Pam and her team of Pivot Business Group, remember that name, Pivot Business Group, they manage over $500 million for their clients, over $500 million. So Pam, welcome to the show.
Thank you so much. I'm so excited to be here.
I'm happy to have you. And you also are married with 3 great children.
Yes.
And I say great children, I haven't met them, but I assume they're great. And so you travel along like I do. We've met at the Board of Advisors Mastermind. And pretty quickly we started working together on deals. And I realized that we are of like mind, share the same values, share the same ethics, and we know finance.
We sure do. And we're a lot of fun too.
And we are a lot of fun. Yes. We like to have drinks and go out and dancing and having fun, work hard, play hard. So Pam, tell us how you got started in this industry.
Sure. So I was in corporate, specifically in the construction for a number of years. And due to some bad decisions, the company that I worked for went bankrupt. And at the end of the day, I protected the owner and all of his assets. I got all of my guys' jobs. And then I was stuck standing there being like, what am I going to do? And I had to, figure out, how am I going to support my family? And so there's a couple decisions that I made that day. One is bankruptcy was never going to happen to another small business owner if I could help it. 2 is I had a skill set that could help people avoid bankruptcy. And 3rd was I was going to build my own legacy. I was done building someone else's company. And so that's where the start of Pivot Business Group came from, because we are a fractional CFO firm, or chief financial officer firm, and we provide financial strategy so that business owners can understand their numbers and they don't have to get to that point where they've got to shut their doors.
Well, that's a lot to unpack right there, right? So you said a mouthful. Number one, I love it when things, I've always said, kind of what Tony Robbins says is, we got to look at things differently. Like, don't look at what happened to you. Look at why it happened for you. Because when you look at how it happens for you, you can truly use a horrible negative experience like going bankruptcy to your benefit. Because if that company never went bankrupt, you probably wouldn't be where you are today, number one. Number
so
2,
true.
It's so important what she just said. And I really want all of my listeners to listen up, pay attention right here. Because in my book, Exit Rich, that Steve Forbes endorses, we talk about only 80% of businesses on the market will actually sell. That means you have less of a 20% chance of success of ever selling your business. So business owners are not exiting rich, ladies and gentlemen. Business owners are exiting poor. They're selling for pennies on a dollar. They're closing their business. Even worse, they're filing bankruptcy, like Pam just said. So very, very, very important. So that was number one thing I wanted to unpack. Number two is I love that negative experience really, put you on a total different trajectory of where you are today. So let's just dive right into it. How do we prevent bankruptcy? How do we help companies? Because you and I have the same mission. My mission is to help save the American economy by saving one business at a time from going out of business and help business owners exit rich. Yours is the same, I believe.
Yeah.
All right.
Yeah, exactly.
So let's get started.
Yeah, perfect. So there's so much that we in our industry can do to help business owners. I think the first thing is just to recognize that most entrepreneurs are ballers and rock stars at what they do, but for some reason, our culture expects them to be ballers at finance and accounting as well. And that's just not fair, because business owners, when you first start, you're everything from the janitor to the plumber to sales to marketing to execution to everything, right? But as you grow and your company and your team expands, you can only wear so many hats. And for some reason, there's a negative stigma around accounting and finance for business owners. And so part of it is helping business owners understand what their numbers are saying and not run away or avoid or hide from them. Numbers tell a story. And in your line of work, very often the story that those numbers are telling is not what the business owners want it to be saying. It's like coming home with a report card that's sealed in an envelope and you're skipping home from third grade thinking you got straight A's, and your mom opens the envelope and you're like, I didn't get straight A's and now I can't go play with my friends. That's.
Yeah, and that's a report card syndrome. And profits is the same thing. It's your report card syndrome. And what do moms do? Oh my gosh, that's the result. Well, they say that's the problem, that you got F's, you got C's, you got D's. No, your report card is a symptom of your lack of profits, which we talk about the 6 P's, Pam. Product. Anyway, the last P is profits. And I always say lack of profits is not your problem. It's a symptom of not running on all the other 5 P's. So that's huge. So most business owners are exactly what you just said. We're entrepreneurs and we're control freaks. So our thought process is if we want it done right, we have to do it ourselves. And so we have our fingers at every pie. We're working in the business, not on the business. And most business owners are not finance experts. They don't even understand accounting. And so they run from it, they hide it. And that's why, what is it, Pam? 2, 3 out of 5 businesses get embezzled every year?
Oh, yeah. Yeah, it's ridiculous. And so the first thing that we do is we help the business owners understand what the numbers are saying right now. And then the next thing is help understand what their goals are and how to create a plan to help them get there. Because most entrepreneurs and business owners do want to exit rich. Like, that's the answer, right? What are your goals? I want to sell this for lots of money. Fantastic. Let's be realistic about where you are right now so that we can craft a plan and a strategy to help you get to that big exit, so that you can work with Michelle's firm and get the valuation and get that big check when you walk away. And there's a lot of tools that we use that we can help business owners grow their profits, increase their sales, like all of those wonderful things that are super fun for us financial people. But it's just helping the business owner figure out what's going on and create a plan with them of how to get where they want to go.
Yeah. So let's, talk about like, what are some simple steps for maybe some, startup businesses, beginners, somebody who's, running small businesses. Because again, like I said, businesses, I think it's 3 out of 5 that get embezzled every single year. I had one client that was embezzled 6 times. You think you would have learned. And so, always say, focus on your strengths, hire your weaknesses. My big advice is hire somebody like Pam, and make sure you have, if you're a small company and you can't afford chief financial officer, well, I'm going to also tell you can't afford not to have one. So you don't have to spend a lot of money to get a CFO. You can hire an interim CFO, which is what Pam's company does. And they have different levels in which they work with clients. But I think number one is to understand the numbers, understand what the numbers mean, because a lot of my owners, they don't even know what a tax return is. They don't understand any of the numbers. They look at it and they go, oh, we're making money. But then they don't realize that they're really close to going out of business or filing bankruptcy themselves.
Exactly. A lot of business owners look at financial reports and just look at the top line and they're like, oh, look at me. I'm a $2.2 million company. And they ignore everything below that. And they see money in the bank and they think they're okay. Well, just because there's money in the bank doesn't mean it's your money. And too often business owners look at their bank balance and say, sweet, I'm good. But they don't realize that payroll is Thursday and the Amex bill is being paid on Friday. And next week, the mortgage is coming out and all of those things. And so they go on a shopping spree. So one of the big things that we work with our business owners is separate your personal from business. And I know this is a nightmare for you when it comes to valuations, because there are so many business owners that are living their lifestyle through the company, like it's their personal piggy bank, so that when it is time to exit, it is time to focus on your profits, the money can actually be there, because your girlfriend, your dog, your jet ski, all of those things do not need to be run through your company.
Yeah, and that's a good point that you bring up. And Pam and I have worked on some deals together. And one thing I can say about Pam right away is she remains calm. Because sellers get frantic, they get crazy. That one company you and I were preparing to go on Shark Tank, Pam, they were like, oh my gosh, what numbers? I'm like, let's just get Pam on. And so that's what she's talking about. So many business owners run personal expenses. I've been in this industry for 22 years. They run personal expenses through the business, and they've been living out of the business. And yes, we can add that back, but you got to keep really good records, and you shouldn't be adding all that back. So there's a fine line that we have to walk in these personal add backs. But the most important thing is to know, because most business owners are living out of their business, and then they're like, well, I don't know what this is. I don't know what this is. I don't know what I'm running through. So we got to get Pam on the phone. Pam's like, da, 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 da. So you really have to, I always say, keep an annual journal by month, what you ran through in January, February, March, April, May, what those non-recurring expenses were, because non-recurring is another big one too that business owners forget about, and really keep up with those financials. The less you can run through your business, the better it is for your company. But there are some legit add backs that business owners can take. Obviously, depreciation, amortization, interest. Obviously, there are times where we can add back salaries depending upon how dependent the business is. And then there's other things that we can add back, like travel and things like that. You just want to make sure that if you're generating $1,900,000, that's not add backs.
Exactly. I had a client that had a 6-figure a month personal Amex addiction. So the company spent hundreds of thousands a month on their American Express, but the owner spent $100,000 a month on everything under the sun that was fun and making his life shiny. But the problem was, when cash got tight, he couldn't understand where the money was going. And so it was really easy to show him on the financial statements, here's where all your money went, buddy, and you got to change your lifestyle. He did not appreciate that conversation, that he couldn't go to Cabo for the weekend for $50,000.
And you got to be careful with those type, $100,000 a month on your Amex card. If there's an audit and due diligence, etc., you got to be careful. So it is really important to try to run your business as clean as possible. But we know that business owners are going to run certain things through the business, and some, like cars, health insurance, travel, things of that nature, could be allowed within moderation. Because also when you go to get lending on your business, guess what the lenders are going to do? They're only going to allocate for a certain percentage of those add backs to go towards your EBITDA, earnings before interest, taxes, depreciation, amortization. So like I said, it is a fine line, but I'm gonna let the expert talk about it.
Yeah, definitely. So there's lots of business related expenses that are fine, but there's a point where it gets excessive when it's draining the company of cash and when you're not aware of how much you're actually spending. Because when it comes time to go to the bank to get a line of credit, they're going to show that you're not making money, when in fact you are, because you're living a great lifestyle, but that lifestyle is being funded by the company. The bank's not going to give you money.
But yeah, well, the bank will give you some, but they're only going to allow for probably, I think it was 10-15% of those add backs that they'll allow for. So again, you got to be careful. And then the other thing too is, they'll look at their P&L, so look at the balance sheets, which is a snapshot of liabilities and assets. And they're like, oh yeah, we got money, but they're not looking at cash flow statements. Most companies don't use cash flow statements. What's your thoughts there on cash flow statements, Pam?
Yeah, so we love cash flow statements. Most business owners glaze over. So what we try to do is come up with key metrics, KPIs that are important for each specific business. And we create a dashboard for our owners so they can see what's important, and those numbers are different for every business. And so sometimes it's how much is in the operating account? How much do you have in receivables? How much is payroll running? How many overtime hours? Like there's lots of different variables that you can track. But what we do is we go in and figure out what numbers tip the scale for that specific business. And we track those because the financial reports, the cash flow statement, the P&L and the balance sheet are all very helpful. But we find that those are helpful for outside entities, but the business owners don't necessarily understand them or want to pay attention to them. So if we can come up with 5 to 10 metrics that they do understand and that we can track in a visual way, like we have stoplight reports. So it's red, yellow, green, right? And, a lot of entrepreneurs are visual. So let's make a graph with it, whatever it takes so that on a weekly basis, track these 5 to 10 numbers to make sure that you're good. And if any of those go off kilter, then we can dig in and figure out what's happening in that area of your business. But what I found is if I sit down and just go line by line with the P&L, balance sheet, and cash flow statement, like they're exiting, right? Like they're just not even paying attention to me anymore. So by creating these dashboards, we're able to go high level. And then if there's an issue, we can dig into the P&L and those statements to figure out what the source of it is. But we're able to allow the business owner to focus on what she or he needs to, and not the minutia of no business owner wants to talk about retained earnings.
Yeah. No, but most business owners don't want to talk about financials, period.
Exactly.
But I love the dashboard. I really love that. Give our listeners some key KPIs that would be on that matrix. So they start thinking about that. And that's really something I want to start incorporating with our clients too, is your dashboards.
Yeah, for sure. So first, you can use big tools, you can use software, or you can just use a spreadsheet. So don't be intimidated by it. Most of our clients, we just have a Google Sheet that we use. We also use ClickUp and some other software for other clients. But the metrics, like I said, vary. Basics, accounting 101 numbers to track. What were your sales for the last 7 days? And then what is your collected revenue for the last 7 days? Because very often those numbers are different because you sell a $10,000 package, but you did it on a payment plan. So there's a difference between what you sold and what you actually brought in. Then it's also important to know what your fixed monthly costs are. What is payroll? What does it cost to keep the lights on? Rent, the fulfillment of any loans that you have. And then what are your variable costs? The things that go up and down, like your ad spend,
COGS,
contract labor, COGS, materials, those sorts of things. And then we can get down into nitty gritty. We've got some clients in the health fitness space. And so one of the numbers that we track with him is the percentage of occupancy of his gym, because that's a huge telltale sign for him that if we're not at X percentage of occupancy for the gym, we know that in 3 weeks, we're going to be tight on cash. And so we can in real time course correct. So every week he's looking at these numbers and he's like, we ran below the threshold. I need to go and do a promotion this weekend so I can get more, people in the gym next week to help prepare for the downturn that's coming. And if you're in real time tracking those numbers, it's a game changer. And for some clients, it's number of proposals sent out. Other clients, it's like number of, like they have a landing page and it's number of emails submitted on the landing page. And then others, it's number of sales calls. So it can vary drastically. So it's worth having a conversation with a financial expert to talk about what's important to you and your business, because the numbers that I track for my business aren't the same numbers that any of my clients track. There's some
I track.
Exactly. And there's definitely commonality between the numbers, but each business is different and each business owner's goals are different. And so my priority and what I want to track might not be what you want to track for your business.
Yeah.
So the goal is to figure out with a financial expert what is important to track, and then have some internal process that can be tracked. And if you can automate it, all the better, because then you don't have to wait for someone to punch numbers in somewhere.
Yeah, I mean, you need an app for that. That's customizable.
So yes, and I've looked it up. And if anybody wants has $150,000 that they would like to invest for us to build it, please give me a call.
Well, I might partner with you on that. So,
Hey, don't tease me.
I don't tease you. You know, I don't tease. So let's go back to the industries, because that's really, really important what you just said, because it really depends upon the industry. If you're looking at construction, if you're looking at manufacturing, you're looking at, like, we're selling a remodeling company right now, we're selling furniture manufacturing, we're selling, you know, all kinds of different business, huge construction company.
Mhm.
And you're going to track very differently, because you're going to track, you know, jobs that come in, those deposits, you know, that come in and that are on your balance sheet. Then you're going to track the inventory. You know,
Retainage is huge in construction.
yeah, and then the WIP, the work in progress. And so there's more, so there, it really depends upon the industry, what you're tracking. So I think this is such a good thing to have this dashboard, and not just for small businesses, but medium-sized, larger businesses too. I mean, we're selling a $55 million company, and they don't always know where they are financially, you know, and they have 350 employees. So this is huge to be able to start there, because I think, you know, I have several companies I own. I'm like, give me the KPIs, give me the KPIs, give me the KPIs. And they're not giving me the KPIs on a regular basis. So it really does need to be automated.
Yes.
And if it could be automated through QuickBooks or any of the accounting systems they're using, I think that would be great. And then that's where we can start digging into these other questions. Like, once you get these KPIs and this dashboard, then how do I pay myself more? You know, how do I manage my cash?
Yes,
Yeah.
exactly. And so once we have a system to track the numbers, then we can dive in and say, okay, we need to increase our profits. What changes can we make that would do that? Because a 1% here, 2% there, 3% there can put 15% to your bottom line. It's not a 1 + 1 = 2. In as strange as accounting and finance is, 1 + 1 doesn't always equal 2. And so if you can make a 1% change here, decrease by 2% here, 0.5% tweak there, you can put 10 to 20% to your bottom line. And that increases what you as a business owner get to take home, and obviously what your company is worth and the cash flow that it frees up. So there's a lot of tools and small tweaks that can be made that will have huge impacts on your business. But if you don't know where to start, it can just be overwhelming.
Yeah, it really can be overwhelming. And the biggest reason I wanted to have Pam on, and we've been trying to get her on for a while now with our two schedules, but it's because the most complex thing in business is the profit, are the numbers, are the financials, which is why profit's my 6P. And again, the reason why I put it last is because lack of profits, people come to me all the time, Pam, and say, I got a profit problem. I'm like, nope, you got a people problem, or nope, you got a process issue, or nope, you haven't protected your proprietary assets, so you're spending hundreds of thousands of dollars protecting your trademarks and your patents. So lack of profit's never the problem. The most confusing thing, and the thing that takes us the longest when we go to evaluate a business and sell a business, are the financials.
Yes.
And really digging in and understanding line item by line item by line item, because I will tell you, 22 years of doing this, most of my clients are, how do I say this nicely? Most of my clients are completely oblivious when it comes to their numbers. And I ask them questions like, oh, I don't know that. Oh, I don't know that. Especially when it comes to the add-backs, which we already talked about. But even just different things like, well, why is your COGS increased, 35% this year when your revenues went down? Just simple questions. And you really got to keep up with the industries. You really got to keep up with what's going on in the world too, because your COGS might increase because supply and demand right now with what's going on in the world, with Ukraine, with the pandemic, et cetera. So there's lots of different reasons that can cause some of these numbers to be out of whack. But first you got to understand the numbers. And that's why I wanted Pam to really come on the show to kind of dive, do a deep dive and make it kind of simple, simplify the conversation around numbers. And so cash, like how do they manage cash? Well, I would encourage everybody to get a cash flow statement. But most businesses, this $55 million company is not using a cash flow statement.
No. And it amazes me how many companies aren't tracking their numbers in real time. We have clients that are multiple millions that come to us all the time that haven't done their books in 3 years, and they don't even know how far behind they are on taxes.
I won't touch those.
Yeah. And so those people, I've got some number ninjas on my team, so we can do 3 years of accounting in 6 weeks. However, it's not going to be a fun ride because there's going to be a whole lot of information we need, right? And so an encouragement to business owners is, look, I don't expect you to be a bookkeeper, but have someone who is. Outsource it, get a VA, there's software, something. Because if you're not tracking your numbers in real time, you can't course correct if you need to. You don't even know where to start to make improvements. So very often we talk to entrepreneurs and they think their numbers are being covered. And then we go in and we're like, okay, well, no one's touched your books in 6 months. Like, who are you paying to do this? Because they're not. And so we've got to go in and get the books current and get everything reconciled. And then we can create a strategy. But if we don't know where you've been, we can't help you get to where you want to go.
Amen, sister. And so when businesses come to me and they haven't done their books in 3 years, I'm going to send them to Pam, because
please do. We have fun. We like it.
Definitely, because, we just, we're in the business of evaluating businesses, helping businesses grow their business, sell their business. But the reason why they're doing that is because, again, I go back to they're working in their business, not on their business. And I go back to what I said earlier about bankruptcies and, most importantly, embezzlements.
Yes.
And 3 out of 5 businesses are being embezzled because there is nobody in charge. And when they do decide to delegate, they delegate, but then they don't trust. They trust, but they don't verify.
Yes.
They don't inspect, but they expect. So you have to have your checks and balances in place. And Pam can set this up for you. I know she can, where you have checks and balances to make sure that whoever you have in place, doing your bookkeeping, checks, etc., has those checks and balances, so you're not getting embezzled. Let me tell you something. A lot of times they say, oh, well, I just got a bad employee. I've seen situations. I have a deal right now where the owner is being embezzled by her granddaughter. I have another deal where the owner is being embezzled by his kids.
Yeah.
It happens. Or I got another deal in my Road to Exit Rich program where we're trying to get the business sellable. They've been being embezzled by their partner.
Yep.
So it's really prevalent, much more than you would ever imagine. It's because owners are not inspecting what they expect and they don't have those checks and balances. And everybody should have an interim CFO like Pam, so you have those checks and balances in place.
And it can be in small ways. We have a client right now that I had to have a sit down with the owners and help them understand that there are employees taking advantage of them. And it's through their travel line item and their meals and entertainment line item. Like, there are people in their company that, granted, do travel for the company and do justifiably need to have meals when they're on the road, are buying every other meal through the company. Thousands of dollars a month is being spent by employees for their meals because for some reason they feel that it's okay to run the company card every time they go out to eat. And the business owners weren't watching it. And so we went in and did our analysis, and it was like, okay, well, embezzlement isn't always writing a check to yourself. Sometimes it's thinking that it's okay for the company to pay for all of your meals.
Yeah, but you got to be very careful with the company expense cards, and you got to make sure that you check those. We have a business that we're working on where the owner had a bookkeeper, gave him a company credit card, and his owner was charging the partner. They were charging the company so much to do the bookkeeping, but then they were charging the partner separately, and that partner was paying it. Plus, they were taking a company credit card and doing travel and meals and entertainment and even going to Saks and things like that. And nobody looked at the company credit card.
No.
So making these small things that you don't even notice.
Yeah. I mean, gas cards are a huge one too. how many times you've got in the construction world, you got 10 gas cards running around in 10 trucks. Well, are they using that same gas card to fill up their personal vehicle or their partner's personal vehicle? I've literally gotten photos of clients, employees at a gas station with the company truck on one pump, and on the other side is their spouse's car, and they've got the hose wrapped around filling up their spouse's car.
Oh my God.
Like, it was a text that I got is like, so-and-so is filling up his wife's car. And
YouTube, and it'll go viral, and then you can get your message across, Pam.
yeah, we promptly called that individual back to the office and fired him. But it's just, there's so many little leaks. Most of the time, it's not someone writing themselves, like I said, a $10,000 check and cashing it. Most of the time, it's small things that that people are compromising on or think that they're justified in having, that they're just walking out the door with. And if you don't have checks and balances, you don't have an outside person making sure that everything's lining up.
Yeah. I mean,
you have no idea how much money you're losing.
It's as easy as ordering, having somebody in your company ordering things on Amazon and then ordering something and taking it home. And I had that happen to me. When they start ordering stuff for their house. I mean, my nanny was doing that. so you gotta be very careful. Again, you gotta inspect everything that you expect. And I've seen it both ways. I've seen where it's those little things, and those little things, by the way, add up to millions upon millions upon millions. But I've seen it to where people have written themselves a $35,000 check, or a check came in and they just signed it back and went and cashed it. There's all kinds of different ways that embezzlement happens, but it's really important to understand the numbers and put somebody in charge, but also, get somebody that really is going to inspect that if you don't have the time to.
Yeah. So track your numbers in real time and have checks and balances, because if I've seen it all so many times, the same person is opening the mail, writing the checks, reconciling, entering everything in, and they think that this sweet person who's been with them forever is handling everything. Well, she is handling everything and being quite generous to herself.
Yeah, so explain that, Pam. You never want, and this is how I set up my companies, you never want the same person checking the mail, making the deposits. What else, Pam?
Writing the checks and reconciling.
Reconciling, and that happens a lot. So you want to make sure you have different people. And again, this cannot just be some sweet little lady. This could be your daughter. This could be your son. This could be your grandma. It happens all the time within families. And friendships, partnerships, but especially families, are so shocking to me that it happens with families because they think they're entitled. Everybody has an entitlement.
Yes, they think they deserve it.
So you gotta make sure you set that up. So Pam, talk to us a little bit about Profit First. I know you're certified in Profit First, and that means pay yourself first, right? Is that what that means?
Yes. So Profit First is a book written by Mike Michalowicz, and it is essentially a cash flow management system. It's a methodology of how to handle your money. And it is a great tool. It's not the right fit for everyone, but for a lot of business owners, it helps them think differently. And it's essentially the envelope system for your business. So think of 50 years ago, grandma would be at home, grandpa would come home from the factory. He'd have his cash. Grandma would put the money into a grocery envelope and a gas envelope and a mortgage envelope and a clothing envelope and all those things. And that's what they would run the house on. Well, it's the same principle, but with bank accounts. So like I said before, business owners look and see there's money in the bank and they think it's theirs. And so if you look and you have 5 bank accounts and one of them says payroll, one of them says profit, one of them says tax, one of them says operating, and there's a number of other reasons that you would have a bank account, and you realize of the $100,000, only 15 of it can I do something with, because everything else is already spoken for because it's in a separate bank account. So it helps the mindset of the business owner, but it also helps them pay themselves more, because traditional accounting says sales less expenses equals profit. And most business owners just hope and pray that at the end of the day, there will be a profit. But in this methodology, it's sales less profit equal expenses. So you're guaranteed profitability, and it helps you run your company with less because you're taking the profit off the top, and not to the detriment of the company, not so that you can't make payroll, all of those things, but it's so that you're taking a piece off to the side as the business owner. And with what's left, you're making your company work.
It's kind of like Rich Dad Poor Dad with the cash flow.
Very much so, yes.
Very similar principle. Does that strategy work with larger businesses too, or is that mostly small businesses?
I've seen the biggest success with like 2 million and less in top line revenue. Larger companies, we can implement portions of it where we'll have like a tax account or an investment account or those sorts of things. But for large companies, in my perspective, the allocations and keeping up with all the bank accounts can be a lot once you hit $10 million.
1,000%. Yeah. I mean, most of our companies, 20, 30, 40, 50, $100 million and up, they know what they could spend.
But there's lots of little pieces of it that are helpful. I'm working with a new client right now who has seasonality to her business. And so we're not implementing all of Profit First, but we're going to create a vault account where it's basically a savings account where when it's raining, a bunch of the money is going to go into that account so that when it's dry, she has money to cover payroll.
That was going to be my next question. I always advise my clients to have savings account.
Yes.
For those rainy days. What percentage of the revenues or the profits, I'm not sure how you figure it out, but what percentage should go into a savings account, and how much should I keep in that savings account? It's different with different size businesses, but.
Yes. So our minimum recommendation is 3 months of your monthly burn rate. So if all sales were to stop, you would need 3 months of cash in the bank account to keep the money, to keep the business running. So that's payroll, that's mortgage, enough to pay any loans or liabilities that you have. And I'm not talking about COGS. I'm talking about keep the lights on your fixed monthly expenses, your fixed monthly burn. 3 months. I'd prefer 6 months, but 3 months is, you're not, in our opinion, you're not thriving if you can't cover 3 months of your monthly burn.
And that's really for small businesses too. I always suggest for larger businesses have more than 6 months to a year. And you really need to know your working capital target. Most companies, that's one of the first things we do when we're doing valuations. We include projections, and we obviously calculate working capital, and most business owners have no idea what their working capital is. And so it's really important for you to know what that working capital is, because that should be what's set aside for those 3 months to 6 months.
Exactly. A lot of business owners don't understand the actual money it takes to keep the doors open for their business. Because when they first start out, they're scrappy and they're doing everything. But as their team grows and they're adding more zeros, they're further away from all of those bills and all those expenses. So they don't realize that it costs $200,000 a month just to run this machine. Mm-hmm. That's not even like profit. That's what it costs just to keep lights on and pay people and cover insurance, right? Like that's a lot of money. And once you can help business owners have that aha moment, it's like, oh,
yeah, then maybe they'll stop that $100,000 American Express deal, because it's not just, and that's right, because they go from scrappy, and then they become a little bit sophisticated, and they get a lot more money coming in. And they're like, okay, I can spend $100,000 a month, and they're still not really realizing what that working capital. All it takes is a pandemic,
exactly,
supply chain issue, or something like that. So you also want to also make sure you have that working capital target in savings, because when you get into a situation where supply and demand and you've got to load up on inventory, and I've had several clients have to do that recently, especially in manufacturing businesses, you want to make sure you have that capital to do that.
Exactly. Yeah. And then it allows you to be able to take advantage of opportunities as well. There's no telling how much millions of dollars we all have to pass up because we don't have liquid cash when there's an opportunity.
I'm a liquid cash person. I always have been. I'm like, oh, cash is queen.
It is indeed. And she is nice to have around.
All right. So we talked about all that. So startups, people just getting into business. There's a lot of women entrepreneurs. I've been on, over 400 podcasts and a lot of women podcasts. I speak at a lot of different women's groups. The women are just kind of getting started. What do they do? How do they start, from the beginning? I think that was one of your big things that you help entrepreneurs work on.
Yeah. So for those female entrepreneurs that are tired of building someone else's legacy and are ready to build their own, the first thing is to make sure that you're set up as a true company. So sole proprietor, stop. Just don't. Create a company, understand this corporate structure that you need, understand the tax structure that you want, get an EIN, get a company bank account, and also understand what your worth is so that when you go out there to the marketplace and you start saying, this is what I'm worth, it's a fair number. I've recently been coaching a business owner, a female business owner. She's has a successful house cleaning business. And so I was going through and she was making a lot of these mistakes. She was a sole proprietor and she was running things through her personal checking account and she wasn't charging nearly enough.
This is a corporate vow.
Really quickly. Correct. And then the IRS is like, oh, field day. Let me have all of your money. And so I've been coaching her. And actually, she texted me 2 days ago, a screenshot that she set up her LLC and has her bank account now. And she's more than doubled her rates. And she understands what it costs her to provide these services. Where when you first start out, I think as women, we don't understand what our worth is. And so we don't understand the value we bring to the marketplace. So to those female business owners that are starting out, whatever you think your price is, double it and then go sell it.
Oh, I love that. Double it and then go sell it. Yeah. That's great. That's great advice, and females in general tend to undervalue themselves than men do. So I love that advice. The other thing that I always tell my female entrepreneurs is you can't be everything to everybody.
Agreed.
I'm expected to what's that song? How's that song go? Bring home the bacon, fry it up in the pan. Make sure your man knows he's a man. Okay. That's that song, right? Isn't that how it goes? Something like that?
Yeah.
Yeah. So, I always tell my business owners, you got to also learn to delegate. You got to keep a journal, a monthly journal. And in that monthly journal, you write down everything from the minute you get up to the minute you go to bed and everything from brushing your teeth to showering, etc. And then you have your A, B, C buckets. Your A bucket is only those things that you can do. You can't delegate, like only I can host my podcast, only I can write my books, and then that's your A bucket. Those are your core competencies. That's what you focus on. And then your B bucket are things you're really, really good at, Pam, but you can delegate to others. And then those C buckets are things you should never do yourself, like clean your own house. If you clean other people's house, get somebody to clean your own house. Figure out what you're worth. If you're worth $50 an hour, pay somebody $15 an hour to clean your house for $50 or run your errands and things like that. Because women, more than anybody, has to focus on energy management rather than time management.
Yes.
And those B and C, especially the C tasks, zap your energy and you're no good to anybody. And your body's like a cell phone or a computer. The more apps you have open, the more tired, exhausted, and you're not going to be good for your clients. You're not going to be good for your family. You're not going to be good for yourself.
No.
Yeah.
There's not a balance. I don't believe there's work-life balance. I think there's work-life integration and there's seasons, but you can be a good wife and a good mom and a good business owner.
Mm-hmm.
But
and have three kids. I have one.
It's really hard to do all of those things by yourself.
You need a team.
Yeah. And
not just employees, but women need a team around their house. Women need a team to help them, with picking up your children, maybe help you with, some nannying duties, help you with cleaning your house, help you with those zapping task energies and really figure out what you were and delegate those out.
Exactly. I love it.
Yeah. Okay. So one of the other things I wanted to talk about real quick on profits that I meant to ask you earlier is when we're really looking at the numbers, it's just not all about the numbers. It's about so many things, and I have to have Pam back on. But when I go through my evaluations, I'm looking to say, okay, it's a manufacturing company. It has a manufacturing plant warehouse distribution center. In their warehouse distribution center, they have all 1099s. What happens if there's an accident and there's no workers' comp? I had a company, manufacturing plant, that had all 1099s on the manufacturing floor, and one of the employees lost an arm. The company, that's it. It's gone.
Yeah, they're gone.
You're looking at financials, and we're both looking at financials, Pam, because I think you do this too, is we look at all that because we're like, okay, well, if you have all these 1099s, then you're able to just reduce dramatically, because the first thing the buyer's going to come in, the buyer's going to look at that and I'm going to say, you got 50 1099s and maybe W-2s. That's going to change your EBITDA. That could change your EBITDA by $500,000 right there. Or you have all your eggs in Amazon basket, and if you lose Amazon, you're going to lose 95% of your revenue. So I wanted to bring up the point. It's not just about the numbers and looking at those numbers. It's about all of those 6 Ps: the people, the product, the processes, the proprietary assets, and the patrons, the vendor list and the customer list. Make sure you have customer diversification, vendor diversification, not vendor and customer concentration, because all of those will kill your business, kill your profits in a New York second. So when we're looking at these valuations, and I know you do this too, Pam, and that's why we work together, is you got to take all that into consideration. Just like
exactly.
I make $500,000 a year. I want that out of the back. No, if the business can't run without, you're not adding that back, because you're going to stay probably 2 to 3 years, and you're not going to stay for free. So
exactly.
There's so many things like that, and paying family members that are not actually working in the business. There's so many things like that you got to look out for. But there's so many things that I know Pam and I look at, like, are the systems up to speed? I mean, we sold a distribution company. They had all paper. They didn't even have computers. Everything was on Rolodex. Everything was on charts, and they kept up with the inventory on paper. So that cost hundreds of thousands of dollars to bring their company up to speed. So when we're really looking at these financials, and Pam's working on growing businesses and giving them over to me, and I'm looking at getting businesses to her when I don't want to do 3 years of reconciliation, we're going to look at that stuff. We're going to look at all of that. So
we look holistically. It's not just the numbers.
It's not just the numbers. It's your people. Are your people W-2s? Are they 1099s? Or do you have a manager that doesn't have a non-compete? Or your right-hand person doesn't have a non-compete, and they can leave you, which means your sale is going to not close. Yeah. So all of those things from the 5 Ps into profits is what we both explore to put you on the right path, so you don't end up exiting poor, you end up exiting rich. And I know you do that too, Pam.
Exactly.
Because I got one client that's got one vendor, and that vendor does all their manufacturing, and they have no backup plan. That vendor is 75 years old, and he has no successors.
So everybody's about to be out of business.
Correct. When we're looking at evaluations, and Pam's working with us, and we're working with Pam on this, we explore all of that on our end, because we want to know the good, the bad, the ugly. We want to know what's going to keep you out of business, about to take you out of business.
Exactly.
All right. So what did I not ask you that I should ask you?
We talked to, go ahead.
I found one. How to add 10% to your bottom line.
How to add what now?
How to add, was it 10% to your bottom line with an expense audit?
Yes. So this is something that we recommend quarterly with our clients, and we do an expense audit. And it's like I was saying, there's normally not one bleeding hole that companies have, but there's lots of little places where they can make savings. So what we'll do is we'll go through the last 3 months of bank statements and credit cards and identify what we need and what we don't need. And it is amazing how much money you can save just by doing that. For example, computer software is the biggest and lowest hanging fruit. If you need to tighten your belt, go to your credit card and look at all the software that is automatically being charged to your card and cancel half of it. Because most likely you signed up for something at $29.99 2 years ago and you're not using it, or you have more users for software than you need. I had one client that had 3 different subscriptions to the same software because they had 3 different people in the company, but they had multiple users. So they were paying 3 times what they needed to for that software. So there's a huge opportunity there. Another is leased equipment. Do you need everything that you have? Do you have the best deal possible? We had one client that was paying $1,300 a month for a copier because they'd always had it. And I asked, well, why do you have this copier? Oh, well, we used to use it to print our newsletters and mail out to our clients. Well, do you still do that? No, we have an electronic newsletter. So how much do you actually print? Oh, very little. And we're paying $1,300 a month for this copy printer. I mean, it was cool. It did some really nifty stuff, but I was like,
good add back.
take it back right now, go to Amazon and buy a $300 printer and be done with it.
And add it back. Yeah. I mean, those are great points. And that goes back to my evaluations and what you do, Pam, we go and look at every aspect, like what you're paying for that $1,300 that you haven't been. I mean, we got a company right now that used to send out, a furniture manufacturing company that used to send out these big, beautiful glossary brochures. And they had spent a fortune in printing internal and external. And I'm like, get rid of all that stuff. They're like, oh, yeah, we never thought about that. So I did this with all my clients when the pandemic started, at the start of 2020.
Yes.
Everybody was panicking. So we went through the P&Ls, line by line on them, and said, okay, what do you need? What do you not need? You know, what subscriptions can we get rid of, et cetera. And, you know, they always want to cut marketing. I'm like, listen to me. Don't cut marketing. What you do is we go through marketing and we look at what's really working for us, what's not. You get rid of the channels that are not working, the platforms that are not working, and you double down on the ones that are all working. But she's so right. You're so right about subscriptions. I mean, the other day, my personal card got stolen, and I was on the phone with my banker to get another one. He goes, you got a $50 subscription here to Crepe Race. I said, Crepe Race? I bought that for my girlfriend who wanted it for Christmas. And they put me on a subscription model. So they've been charging me $50 a month. Now that's my personal card, $50 a month, and never send me products. So you really got to go through your credit cards. You really got to go through your bank statements. Because you get caught up into these subscriptions like Pam just talked about. Oh, and here's the other thing. I had my clients, and I did this myself, but we would go to Infusionsoft and say, you know what? We're having tough times. You're having tough times. We're having tough times. Cut my bill in half. I'm sorry. You're going to be one I have to cut. And we would go back to a lot of our vendors and renegotiate, go back to the credit cards and renegotiate. And so that's important not to just do during a pandemic. Pam brought up such a great point. That's important to do all the time.
Yeah. And it is amazing how much money you can save. And also look at employees and contractors. Is everyone being as effective and efficient as they can? And it might be because you as the owner have not given clear expectations. And so can you raise the bar of your expectations to get a bigger bang for your buck? Or do you need to lower how much time and resources you're receiving from that person because you don't need them the way you used to?
I mean, 2 people can do the job of one. And that's where you go back to what seats do you need that you need filled and how many people can fill one seat. But you brought up such a great point just now. You're handing me all these softballs.
Okay.
So we were selling a plastics manufacturing company that does plastic, all kinds of plastic wraps for meat and stuff like that. And it's slim margins. And their culture. So I'm not going to give away too much information here, but they've been in business for decades. And they're all about family first, family first, family first. Their employees are their family, which I think it should be. But you also got to make sure you're managing that correctly. And so they had all these employees that had been with them almost through inception, and they kept raising them, giving them raises, giving them raises, giving them raises. And there's such a slim margin in that industry, is so competitive that what happened was they out-labored cost their profits. So they weren't making any money. Husband and wife actually put money in the business, putting their money in the business just to pay the employees. Just to pay the employees. So when I say lack of profits is never your problem, it's a symptom of, it was a symptom of extreme labor cost because they kept raising without raising margins, without raising prices, without cutting other operating expenses. I can give you story after story after story like that.
Yeah. Yeah, no, I agree. We see it all the time.
This
And
is
so
not sellable, just to say that.
yes, yeah, you cannot, yeah, we can't sell you. Thank you. Yeah, business owners, again, are rock stars at what the thing they do. And it's a lot to ask for them to be rock stars at everything. So partner with people that are good at the things that you aren't, bring them in, hire them, have contractors, outsource it, something, so that you can make sure that all of those 6Ps, all of the moving pieces are strong within your company. So when you are done and ready to walk out, you can.
Yeah, 1,000%. And I always say, focus on your strengths, hire your weaknesses. So many entrepreneurs are intimidated to hire people smarter than them. And let me tell you, there's somebody smarter than everybody. Donald Trump, like him or hate him, I'm not here to talk about that. I'm here to talk about Donald Trump, before he was president, would never, ever, ever have the success that he had if he didn't have George Ross. Because Donald Trump is a visionary. George Ross is a deal maker. George Ross makes sure I's are dotted, T's are crossed, and I get sure, the devil's in the details, right? You gotta not be intimidated by hiring people that have the core competencies that you don't. And like Pam says, if you can't afford it, then you can always contract with. You can find yourself a mentor, not just any mentor, a mentor that's been down the road you want to travel and that's been highly successful.
Yes, definitely.
All right, Pam. So what else? What did I not ask you? What more words of wisdom do you have? Golden nuggets.
Just understand that your numbers are telling a story. And if you're not listening to it, other people are. And most likely it's not a story you want told about you. So understand what that story is and change the narrative.
And that's so important, especially when you go to sell your business, because when business owners finally think about, because most business owners never enter into their business going, oh, I'm going to sell it. They don't plan their exit. And that's the biggest reason why 80% of businesses don't sell. And then one day they wake up and they go, shoot, I'm getting a divorce, which is 51% of the people in the country. Or, oh, well, I have a partner dispute. Or, oh, I was just diagnosed with, cancer or something. Or we're in this pandemic and my numbers are down, or we can't get employees because staffing is the worst it's ever been. And so they wake up one day and say, Michelle, I want to sell my business. Okay. Always want to take their temperature, because every business owner thinks their baby is, every parent thinks their business is pretty. I know, Pam, you think your children are most beautiful. I think my daughter is the most beautiful. And most business owners think their business is the most beautiful. I'm here to tell you your business is not as pretty as you think it is, and so is Pam. And so you really, so they'll come to me and say, I want to sell for $10 million. And their EBITDA is 100,000, or $500,000. So you really, she's so right in the story. You got to know your numbers. You got to know that EBITDA. You really got to know what you're running through the business. And that's the biggest mistake is business owners give us these numbers. Pam, we've been through it. And they don't know, they forget. And it's my job to get as much, to increase the EBITDA so I can get you more money. And the numbers tell the story. So if you want to sell your business for $10 million, you need a $10 million story.
Yes. Agreed.
All right. So any last words of wisdom? I know you got so much and it's an hour show.
I think we're good. I'd love to come back if there's other time or other topics, because there's lots that we can talk about and lots of stories we can tell. But I think right now I'm good.
I think you come back and we'll talk about actual evaluation.
Ooh, I love it.
That would be so much fun. All right. So Pam, give us a fun fact about yourself.
I'm an Air Force brat. And so when I moved into college, it was my 9th move.
Wow. Now you were never in the Air Force and all sorts either.
No, I wasn't, but my dad was, and we got to cart it along every year or two to wherever he was getting moved to.
And that's tough. I mean, that will give you grit, because I was the same way. I was part of the Air Force family, but my family, my father's from 12 siblings. And so when he'd get mad at him, he would just pick us up and move. And so when you have to restart schools, it's tough. That will give you grit.
Yes. So yeah.
When you look for employees, look for grit.
Agreed.
All right. So Pam, how can our listeners find you? How can I connect with you?
Yeah, super easy. Just go to pamjordan.com. And that's my website that tells you all about all the services I offer, all of my courses, my book, where you can find me on social, everything. So just pamjordan.com.
And I know you have a lot of different packages and flexibilities where you can work with entrepreneurs just getting started all the way up to those larger type businesses.
Correct. Yes.
All right. All right. Well, thank you so much for being on the show. Glad I finally got you on. You've been a wealth of information. And a big thank you to all of our listeners. If you like this podcast, share it. Share it with your friends. Share it with your community. Share it with your fellow entrepreneurs. I always say your network equals your net worth. So share this podcast. Make sure you subscribe. Make sure you listen to us. Make sure you go like us on Instagram, Twitter. We're everywhere. And so till next time, thank you for joining us on another episode of Exit Rich.
Thanks for listening to the Exit Rich podcast. Don't forget to check out Michelle Seiler Tucker's Build to Sell Blueprint books and Exit Rich, along with more blogs, videos, and resources at exitrichpodcast.com. Be sure to connect with Michelle on Facebook or LinkedIn and stay tuned for her next episode by subscribing in your favorite podcast player.